Morris. That's a Bloomberg Business Flash. Now back to Bloomberg Business Week Daily with Carol Masser and Tim Stenivek.
Hey, thanks for that update, Amy. Do appreciate it. Mark Zuckerberg taking the stand in federal court today as the first witness in the U.S. FTC's antitrust trial seeking to break up Meta Platforms. He's the company's founder and CEO, of course. He's set to face questions about Meta's acquisitions of Instagram and WhatsApp. The FTC is seeking to force Meta to divest those platforms, alleging the acquisitions gave Meta an illegal monopoly on portions of the social networking industry. To that, here's FTC Chair Andrew Ferguson earlier on Fox outlining the case.
Here, we have actual evidence that the transactions turned out to be anti-competitive and have given Facebook and Meta a tremendous amount of power. We certainly think it's a monopoly, and we think that the evidence that we're going to put on at trial is going to show that it's a monopoly. And look, we all saw full on in 2020 how much power these social media platforms have over every aspect of our daily life, of our politics, our elections, our social lives, our economic lives. And that's what this case is about addressing that sort of power and making sure that 2020 can never happen again.
That was FTC Chair Andrew Ferguson on Fox earlier today outlining the case. For more, we bring in Jen Rhee, Bloomberg Intelligence Senior Analyst for Antitrust. She joins us here in the Bloomberg Interactive Brokers studio. I wanted to play that clip for you because it sounds like the case is about a couple different things, at least to the FTC chair. What is the case actually about? Because it sounded very political, and this is a case that has been a long time in the making that has spanned administrations.
Right. Well, it really is just about Facebook's acquisitions of Instagram and WhatsApp. Now, a long time ago, there were other allegations in the suit. They've all been thrown out. They're gone, having to do with not working with competitors. It's just these acquisitions. And the allegation is that for both of those companies, Facebook, at the time called Facebook and not Meta, was concerned that they would grow or be bought by a Google or somebody like some other big tech platform and become a real competitor to Facebook and give them a tough time in social networking. And so they bought them instead. It's sort of what they call a buy and bury, although they didn't bury, strategy. Yeah. And they're saying that just those acquisitions, that itself was anti-competitive conduct.
So hold on, is that not allowed? Like, you know,
sounds like a business strategy to me.
You know, if you think about it, like, let's just think about it from the consumer packaged goods business. A large soda manufacturer going and buying a fast rising upstart that is making some sort of drink that a lot of people are seeming to enjoy. Is that anti-competitive?
So it isn't anti-competitive on its face, no. And first of all, it has
Obviously,
to do,
I'm not a lawyer.
Right, well, it has to do with a monopoly position. Do you have a monopoly, and have you done this to maintain your monopoly? That's the allegation here. So a company that isn't considered a monopolist, they can do something like that. The other thing is, we're talking about buy and bury. So sometimes these things look anti-competitive, where a dominant company buys up an upstart and then kills it. It's gone, which didn't happen here.
We've seen that.
Yes.
I'm not going to say who, but right, we've definitely seen that with various big tech companies.
Exactly.
That happens.
Right, we've seen it, but that isn't the case here, which I think makes this case a little bit difficult for the Federal Trade Commission, because Facebook didn't just buy Instagram and WhatsApp and kill them off. Right. They put resources in, and they improved companies that were really very nascent at the time that they were acquired.
But so the issue isn't, boy, this makes them even a bigger monopoly when it comes to the social world, or is that part of it as well?
Well, that is part of it.
Adding it on.
That is part of it, that they basically just maintained this monopoly they had in personal social networking, and by just buying up everybody, they own them all. You know, they keep Facebook Blue, they call it, the original, and Instagram separate. They're two different products, even though they're both owned by Meta, and that they maintain this monopoly over personal social networking, and what that results in is lack of choice for consumers, lack of quality. Maybe there's less privacy protections, there are more ads. Maybe if you had some competitor, you'd have better options as consumers. That's the allegation here.
Is that TikTok calling?
Good point. Very good point.
So what's at stake? Because Mark Zuckerberg already taking the stand in federal court today. What did we learn from any of that? I know it's all kind of happening in real time.
It is, right. He's really important here because there are two sides to this case that makes it very strange. There are a lot of documents, mostly by Zuckerberg, authored by him or he contributed to in an email chain from 2012 and 2014 when these companies were bought, saying it's better to buy than compete. Right? This is bad. It looks like the intention is we don't want to compete. We just want to buy them up so that they won't be competing with us. But on the other hand, you have the situation where they put the money in, they built these companies up, And also, you have to prove as a plaintiff that it caused consumer harm. Maybe the intention was bad, and Mark Zuckerberg's going to have to explain away those documents and what he meant at the time. But even if they prove that the intention was bad at that time, they also have to prove that consumers were harmed. That is very difficult. Think about it. Many years ago, technology advances and changes very quickly. We have TikTok now. We didn't have TikTok then. YouTube has expanded since then.
Right.
So would we be in a better position had they not bought the companies? Those companies could be gone for all we know, or they could exist in some weakened form than they exist today. And how do you prove that consumers would be better off? And I think that's a big problem here.
One last question real quickly, like 20 seconds. Might they potentially have to get rid of these?
That's what the FTC is seeking, and that's a big deal because about 50% of the ad revenue from Meta comes from Instagram.
Yeah, that changes the business dynamics. Jen, thank you so much.
Thank
Jennifer
you.
Rhee, she's Senior Antitrust Litigation Analyst here at Bloomberg Intelligence, and that's exactly where we want to go, kind of the business story of what is Meta.
And for that, we go to Bloomberg News Big Tech team leader Sarah Fryer. She's also the author of the book on Instagram. This is the book on Instagram, No Filter, the inside story of Instagram. She joins us from our San Francisco bureau. Sarah, I wanted to start where we left off with Jen just now, and how much the ecosystem, the landscape has changed since Facebook, which it was then called, made these acquisitions, and what the landscape actually looks like today. I mean, these are completely different worlds that we're living in.
It's just an incredible sea change since then. It's really been from then when Facebook was about to go public, it acquired Instagram. So remember that 2012. You may not even remember. It's so long ago that that Meta, then Facebook, there were a lot of doubts as to whether it could succeed when Instagram got that offer from Facebook. It was widely considered to be a really rocky IPO. They lost a lot of their value by the time the acquisition closed. It wasn't worth $1 billion. It was $713 million, $715 million because of the decline in Facebook stock since its IPO. And Meta was not the juggernaut it is today. It was the leading social networking company, but certainly you could have seen a number of other companies try to acquire Instagram. Twitter tried. There are a number of other big tech companies that tried. So it could have ended up going a very different way, right? And this is also, in the WhatsApp deal era in 2014, when Meta had a lot more money to throw around, $19 billion, it was competing with Google for that acquisition.
Well, so this is where, we talked with Jen Rhee about kind of some of the legal implications here and maybe how it might go. But what is a Meta if they've got to get rid of Instagram and WhatsApp? What's left?
So interesting to me is the integration between those properties really accelerated right around 2018, 2019, when the FTC was looking into this competitive power. Only in the last few years have those companies gotten as tightly integrated as they are, really shared their network, shared their data. But from the very beginning, Instagram was relying on Facebook for infrastructure, transitioning a lot of its back end to Facebook, relying on Facebook for its advertising product. The ad product has always been linked. So there are a lot of integrations that go way back to the beginning. WhatsApp, I would say, was more independent until maybe around the 2018 era because of its design is so different. And it was a little bit more mature when Meta purchased it. But yes, a lot of integration since then, and also a lot of strategic change in the algorithms for these products. One thing the FTC keeps talking about is that Meta has a monopoly on the social networking market, the friends and family social networking market. And Meta is arguing, hey, that still happens. Yes, that's still important, but we are much more about entertainment now, and we compete with YouTube and we compete with TikTok. For messaging, we actually compete with iMessage. So they're trying to say that we're a very different company now because of the changing consumer need.
But Sarah,
and that also started around the 2019 era with the rise of TikTok.
But if they didn't have those two companies, would that be kind of a disaster for Meta?
Oh, absolutely.
Okay.
Yes. Instagram drives all of their revenue growth. Not all of it, but it's the fastest driving revenue growth for the company. They need Instagram's ad revenue growth in order to fund all of these important initiatives that they have in AR, VR, artificial intelligence, all these very expensive initiatives that have not paid off yet by any stretch of the imagination. Just complete money pits at this point. So this is really crucial for them to keep the company together. We've seen Zuckerberg really warm up to President Trump, for instance. We have seen him purchase a house in D.C. and donate to the inauguration and make many visits to the White House. I wonder why. This is really crucial for Meta. This is a historic trial for them. But we have kind of seen a lot of pressure on this company in the past. This is one of the companies that has been in the crosshairs of DC for years now, since the 2016 presidential election. Trump started the techlash. Will he finish it? I don't know. But I think that we've seen Meta get by through the years without a lot of damage, despite the congressional investigations, despite the attorney general investigations. And it keeps evolving, it keeps changing, which makes it hard for the FTC to make the argument that it's making and really chase the tech sector as the tech sector evolves. We're going to see the DOJ try the same with Google.
That's what I was just going to ask.
Month.
20 seconds left. If the FTC does, or if Meta Platforms does have to shed assets, who's next?
Google is going to be in the same building as Meta. The trial's going at the same time. Their remedies trial for their monopolistic behavior via the DOJ. The remedies trial meaning it's going to be determined what they have to do. Do they have to spin off Chrome? Do they have to change something about their advertising business? So they're going to be in the hot seat as well. So I know their lawyers are very closely watching what's happening.
Fun times for big tech. Great stuff. Sarah, thank you so much. Bloomberg News, big tech team leader Sarah Fry. She's also the author of the book on Instagram, No Filter, the inside story of Instagram. Are you live?
Dancing.
It's 3:40 on Wall Street. I'm Amy Morris. Stocks moving higher. We check markets for you all day long at Bloomberg. Let's go to the first word breaking news desk for today's afternoon call with Jordan Fitzgerald.
Main U.S. averages are back in the green after Trump said he's weighing a pause on auto tariffs. The S&P cash is up 1.3%, led by real estate with discretionary down. The 10-year yield falls to 4.37%. Gold is in the red. Oil settled little changed. Bitcoin is up nearly 2%, and the VIX fell below 30 for the first time since April 4th. Meta's antitrust trial kicked off. LVMH earnings disappointed, and Harvard rejected an agreement with the Trump administration.
All right, thank you, Jordan, for on-demand news 24 hours a day. You can subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris, and that is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the drive to the close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, everybody, we've got about 18 minutes to go until we wrap up the trade on this Monday, April 4th. Carol Masser, Tim Stanovic live in our Bloomberg Interactive Broker studio. And bouncing around here in terms of the equity trade, you just heard the team breaking down the numbers. We're definitely off our lows of the session. Back up, but certainly on the S&P and the Dow near our highs of the session. That means up about 1.4% on the S&P 500, Dow Jones Industrial Average, and the NASDAQ 100, both, Tim, up about 1.25%.
So we're back.
So we're back. Yeah. I mean, it's an interesting kind of mellow day. And yeah, it's interesting to see green across the screen, which was highly expected.
After last night
and
what we saw over the weekend.
Well, because of, what we saw over the weekend and stuff. And we definitely saw, I think, Asia overnight.
I don't know.
We saw some rallies. But
I'm still very confused by it. And I'm hoping Andrew Sliman can help me see the light.
Let's see what he has to say.
He's Senior Portfolio Manager and Head of the Applied Equity Advisors team at Morgan Stanley Investment Management. He joins us from Chicago. Andrew, good to have you back on with us. The reason I say I'm surprised is because I think it's fair to say a lot of folks out there would say after this weekend, yes, there's this pause, but we still don't have clarity on what exactly is going to happen when it comes to trade and tariffs. Fair?
Absolutely. Thanks for having me on. But look, I think last Wednesday was a pivotal day because you can get growth scares where the market's down 15 up to almost 20%. That's a growth scare. But once the market gets past 20% down, the likelihood of recession is very high. And that's when the credit markets start to quake. And basically, President Trump came out and said, I don't like to see what I saw in the bond market. So I'm putting a delay on. So I think, in effect, what he did was he put a floor on equities. He didn't want them to go down more than 20%. And so, that's what a growth scare. You can have a V bottom like we had in 2018 and 2020, or you can have a retest like we saw in 1998, 2011. 2022, you just don't know. But the point is sometimes you don't have retests, and maybe this is one of those times.
Sometimes you do, sometimes you don't. I mean, isn't it safe to say, Andrew, that investors are still kind of struggling to game out what the scenario is and the economic spillovers of a trade war, even if it's maybe not at 145 or 125%? Many folks were saying even a 10% across the board tariff, I should say, from the United States against trading partners. It's a big deal. It changes the dynamics of certainly how you think about 100%. Companies, how you think about their earnings, and how you think about investments.
100%. But a lot of stocks are down a lot more than 10%. I mean, whatever the tariff impact, stocks are down. You've got some of these big Mag 7 stocks that were down over 30%. So a lot of bad news was priced into them. And I'm a big believer in watching kind of earnings and earnings revisions. But at times like this, I mean, I chuck that playbook because I don't think anyone knows. I read a research piece where someone, an analyst brought down their Apple estimates by 30%. and then they reduced that to only down 7%. No one knows. So the question becomes, what is embedded in stock prices? And there was a lot of bad news. So I think the market is rallying on the expectation, maybe it's not the worst scenario. I'm not pounding the table. I'm just saying, the answer to Tim's first question is, why is the market going up? I think, the news is slightly not as bad as it was, before last Wednesday, and the markets respond to positive rate of change.
Are you concerned about? Well, I don't know a good word for this, but it's like the idea that if you're an executive at a firm that's trying to make decisions about CapEx, trying to make decisions about hiring, and you don't really know how much you're going to have to pay due to tariffs, there's this like paralysis that happens, I imagine. Do you think that's happening?
Yeah. Correct. My next question to you is, how much is the stock down?
Yeah.
Because if a stock isn't down much and that comes out, then I'm worried. If the stock's down a lot because the market anticipates paralysis, then I'm not as worried. So, yeah, I think there'll be a lot of that. But then the question is, what's the setup going into that, earnings number? I think the market anticipated that there will be this paralysis.
So is the market fairly pricing in the risk, in your view?
Well, I mean, last Wednesday was, but we've had a heck of a rally here off the low, and the more you get a few more days, and I'm going to turn a little bit more cautious than I was. I wrote a piece last Tuesday that just said the playbook says down 15%.
What in your view changed? What in your view changed on Wednesday? Because Carol and I have been talking about this for the past few days. What changed on Wednesday? Yes, it's a 90-day reprieve, but still means that 85 days from now we're going to be talking about this again.
And now we're in limbo.
Yeah, my view changed because of what the president said. Very important. He didn't say, hey, we're putting a 90-day, reprieve on because, all these countries are coming forward. He said he's putting a reprieve on because he heard Jamie Dimon said chance of recession. He said he's putting a reprieve on because he didn't like what he saw in the bond market. That tells me he's watching the financial markets, right? He is watching. So to me, that's what's changed. That's the key, is that he's not just, hey, we're just going to push forward and it's going to be pain out there, but it's all for the good. No.
Right.
He pivoted.
Andrew, have you ever been in like an Uber or a cab and they're like, foot on the gas, stop, foot on the gas, stop, foot on the gas, stop.
And I turned green.
And you turn green.
Well, so my point is, so he backs off, but we know he likes tariffs. The president's been very clear for years and years and years.
The most beautiful word in the English language is what he said to our editor-in-chief.
What that means, Carol, is the more the market goes up in this little bounce, the more he emboldens himself to not care about the market. So I think it goes back to this point of,
how do you invest in that environment, though, where he might be like, tariffs on? No, okay, market sells off, bond market gets crazy, tariffs off. How do you... CEOs are saying, I don't know how I make decisions. I don't know how I do things going forward. Like, how do you do stuff? Sorry, about 45 seconds left.
I think you invest when the market is down and you get a little bit more bearish when the market's up. You have to tack against the, conventional wisdom. People were screaming scared after the market had dropped 17%. That's ridiculous. Likewise, to think it's all fine now, that's naive also. So my base view on the year is, look, it's a pause year. We've had 2 great years in a row for equities. The multiple got a little high. We're due for a pause year, but there'll be trading opportunities. I don't think this is the last time the market's going to drop like this. I just wouldn't chase it assuming everything's fine now.
We're still up 40. We're still
attacking against the headwinds.
We're still up 41% on the S&P 500 from the end of 2022.
It's great.
That's not so bad.
That's why we need a pause year.
Just don't look at your 401k right now.
Why
not?
It's
a little painful. Not doing it. Andrew, thank you so much. Andrew Sliman, he is Senior Portfolio Manager at Morgan Stanley Investment Management, joining us from Chicago.
You're listening to Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio.
It is Bloomberg Business Week Daily. That's Carol Masser. I'm Tim Stenovec. I said to some of our listeners, depending on where you are, some of our viewers in the world, you might have heard it. It's one of the most read stories. No, it is the most read story on the Bloomberg terminal today.
I got to say, when it crossed in the newsroom, we're like, okay, has to do with Harvard.
Yeah, the school, the university, refusing to accept a deal with the Trump administration 2 weeks after the U.S. government threatened to halt $9 billion in funding, vowing it won't negotiate over its independence or its constitutional rights. Check out this letter that the school's lawyers wrote. Quote, nearly Harvard nor any other private university can allow itself to be taken over by the federal government. This is a statement from the school's lawyers, Quinn Emanuel Urquhart and Sullivan and King and Spalding. They wrote this in a letter Monday to U.S. agencies, including the Department of Education. Harvard's president, Alan Garber, said in a post on the school's website that the administration demanded new terms late Friday that went beyond prior requests. These included reforming its governance, ending diversity, equity, and inclusion programs, and changes to its admissions and hiring.
I think it's kind of interesting, and I think some folks have been saying, well, this is why these schools have these massive endowments, that they can go ahead and continue to do things.
Former President Barack Obama said that a few weeks ago.
He did indeed. And it's just, listen, oldest and richest U.S. university, massive endowment. You're talking about $53 billion. And they are among the very elite institutions, a lot of them Ivy Leagues, that have become really targets of the U.S. government. And the government seeking changes when it comes to diversity and equity and inclusion programs and initiatives. Also, you had a lot of these universities roiled by the protests that we saw over the war between Israel and Hamas. And so they have become really front and center, and the administration really has aimed at them to kind of change their policies. And a lot of them are saying about anti-Semitic policies that are at the university. So it's interesting. Garber, who he put out, he is the president, he's Alan Garber, he's the Harvard president. It makes clear that the intention is not to work with us to address anti-Semitism in a cooperative and constructive manner. He wrote this. Although some of the demands outlined by the government are aimed at combating anti-Semitism, the majority represent direct governmental regulation of the intellectual conditions at Harvard. And again, many would argue that academia is where you should be free of thought, and many thoughts should be welcomed. And that's where you learn about different thoughts, and you have debates, and you have conversations, and you kind of muddle or figure your way through. So kind of interesting to see this pushback, because a lot of other universities have said, okay, tell us what you want us to do.
Well, let's go through some of what has happened just in recent weeks. The Trump administration has already canceled $400 million in federal money to Columbia University. That was in March. It froze dozens of research contracts at Princeton, Cornell, and Northwestern. It also suspended $175 million at the University of Pennsylvania because the school allowed a transgender athlete to compete on its women's swim team several years ago.
Yeah, university, in a defiant note on the website, stated it will not surrender its independence or relinquish its constitutional rights. Neither Harvard nor any other private university can allow itself to be taken over by the federal government. So kind of fascinating. Former Harvard President Larry Summers, frequent critic of the school's response to anti-Semitism on campus, was supportive of the school's move on social media, saying he hopes other universities take a similar stand. Jeff Fisher, the former dean of Harvard Medical School, on X described it as a, quote, powerful and entirely justified statement by the Harvard president. So very interesting and very different from what we've been seeing from a lot of academia.
So those are folks who support it. The move also elicited, though, a furious response from Elise Stefanik. She's a Republican U.S. representative from upstate New York. By the way, she went to Harvard, and she said it's, quote, time to totally cut off U.S. taxpayer funding to this institution that has failed to live up to its founding motto, Veritas. Other folks say this is standing up for its founding motto.
Exactly.
Veritas.
Some might say it's a different argument, like, do these schools actually need any kind of federal funding considering their massive endowments? That's another discussion, but the independence of our academic institutions, many would argue that that is really crucial and so much a part of our foundation of our country. All right, folks, do not go anywhere. We're counting you down the close, counting you down to the interview with the Treasury Secretary right now. The closing bell starts now.
We're not going to be tight-lipped with you. We're going to have a full breakdown of all of today's market moves, from stocks to bonds and everything in between. That starts right now.
closing bell. Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Scarlet Fu. Today, Alex Steele is off, helping taking you through those closing bells. A global simulcast starts right now. Carol Masser, Tim Stanovic, they are in the radio booth, and they join us as they do every day at this time.
I don't even
as
know
we
who
welcome
you
our
guys
audiences
are anymore.
across all of our Bloomberg platforms. Carol Masser.
Hello.
I've been gone for 2 days.
I know.
You're still talking over me. Did you actually stop talking when I was gone?
No, you can ask the folks. No, but there's been so much going on.
It's great to see you too.
Volatility in the markets. It's nice to be talking with you guys again. Up and down we went today as well, but I think many would say it's interesting to see at least some green across the screen and some movement to the upside considering all of the volatility we've had over the last week and a half or so.
Well, that said, we are still seeing a little bit of a downturn as we do get closer to the close. The S&P 500 was up as much as 1.8%. It did fall as much as 0.1%. Higher right now by just about 0.8%.
Having said all that, things feel relatively calm, muted, normal compared to the last week and a half. The S&P has gained only 3 times since the April 2nd tariffs were announced, and today's advance is actually the smallest of those 3 gains.
Getting a boost, though, today from, of course, some of those big heavyweights like Apple up about 2%. That's your biggest point contributor here to the S&P 500. Some of the healthcare names like Lilly also doing their work. But then you had that drag from Meta, from Amazon, Broadcom, NVIDIA. In fact, a lot of the folks in the chip space really getting dinged, of course, after additional tariff headlines now saying that maybe chip tariffs are coming, which I don't know.
At some point.
I thought they were coming and they weren't, and maybe now they are. I can't keep up with anything here. What I can keep up with here are the closing numbers on the screen. You can put today's numbers in the book as you get the bells and the clapping and cheering that go along with it. A Dow Jones Industrial average higher by more than 300 points, or about 0.8%. The S&P 500 looks like it's going to gain a similar amount on a percentage basis, roughly about 43 points, closing right above that 5,400 level. The NASDAQ composite higher by more than 100 points, or 0.6%. But your gainers on today, you're going to find that your outperformers, on the day are going to be in that cyclical space. The Russell 2000 up 1.1%, S&P mid-caps up 1.2%, and Dow Transports clocking in at about 1.2% higher.
All right, back to the S&P 500 we go, and Romaine, of course, breaking down all of those closing numbers, but you got about 432 names actually in the S&P 500. Scarlett gaining some ground today, 70 to the downside.
All right, let's take a look at the IMAP, which shows the sector performances. And remember, on Friday, this was all green. Today, there's a slice of red, and it's in consumer discretionary. And just taking a look at some of the names, companies that certainly do rely on importing from, say, China, are among the decliners there. So which makes sense given everything we've heard about the tariffs.
All right, a lot of green, had a lot to choose from. I want to go to, speaking of tariffs, we did see GM and Ford as well rallying in today's session. GM up about 3.5%, Ford a gain of about 4%. This is after you did have the president come out and said he was looking at helping car companies with tariffs. So a whole boost to the group. Stellantis also seeing some gains. Romaine mentioned and singled out Apple. This one at its highs today, guys, up about 7.5%, finishing the day, though, with only a gain of about 2.2%, but nonetheless to the upside. Again, we go back to the bigger, broader macro story of tariffs. President Trump's administration, of course, temporarily exempting phones, computers, and chips from its so-called reciprocal tariffs. So at least for now, they are spared, and that company's global supply chain spared as well. As we know, so much exposure to Apple when it comes to China. Let's all go to Intel. Romaine, you mentioned the stocks, and overall it was just a little bit higher as an index today, but you did have Intel up almost 3% in today's session. The company entering into a definitive agreement to sell 51% of its Altera business to Silver Lake at an $8.75 billion valuation. So again, Intel continuing to kind of remake its future, and so selling that off. And then I got to mention Fannie and Freddie. Fannie up just shy of about 9%, but was up as much as 14% earlier in the session.
What was the big news that they were tweeting about?
I don't understand that this is the news that gets it going.
Yeah.
Initially,
Pulte
there was
came out.
Initially, there was a tweet. The Federal Housing Finance Agency Director William Pulte said in a post on X that news on Fannie Mae is coming shortly. We did get some news that Omid Malik, co-founder of 1789 Capital, joining the board of mortgage giant Fannie Mae.
Was that the big news?
I don't know. But keep in mind that company is the investment firm where Donald Trump Jr. works.
Yeah, so no conflicts of interest. I am curious, though.
Clean
I mean,
as
when
can
you
be.
say big news on Fannie Freddie, obviously everyone's waiting for the actual big news, which
Correct.
is, what happens with this conservatorship and whether it's unending and whether we take these companies back into the hands of real investors here. Did he not touch on that at all?
I didn't see anything like that, and it seems like they're still waiting. So maybe that's why we're off its highs. But yeah, it's like everybody's kind of on pins and needles. So we're still waiting. TBD. All right, over to you, Tim.
Okay, let's start with some of the prominent decliners that we saw in today's session. Romain mentioned Meta Platforms dragging down the indices, falling by 2.2%. I'm keeping an eye on them after the FTC's antitrust trial got underway today. The FTC is seeking to break up Meta Platforms, and we actually saw Mark Zuckerberg take the stand earlier. The FTC is seeking to force Meta to divest Instagram and WhatsApp. It alleges that the acquisitions gave Meta this illegal monopoly on portions of the social networking industry. The trial is expected to last a couple of months. It's going to also feature testimony from former Meta executive Sheryl Sandberg. And I'm also watching shares of what happened with LVMH today. Here in the U.S., ADRs of LVMH fell by 6.4%. This after the company reported that sales of the company fell more than expected in the first quarter. This was due to weak demand for luxury goods in China and in the U.S., and there's a threat of a trade war, of course. The company's fashion and leather goods division, which is its largest unit, saw a 5% decline in revenue on an organic basis. Analysts were expecting only a decline of just about half a percentage point to 0.6 percentage point. LVMH is considering price increases to offset the impact of tariffs.
Price increases?
They've got room to adjust marketing costs. Wow. They don't plan to radically change U.S. production. They've got 75 brands. They don't call them brands. They're maisons.
Really? That's what they call them?
Yeah. 6 sectors.
AKA brands.
Fendi, Louis Vuitton, Tiffany, Sephora. This is like Romain's world. He's the luxury goods guy.
Oh,
they're houses.
You.
So yeah, that's French, Carol. For
houses.
Yeah.
There are 75 houses in 6 sectors.
Is that like Horst Duvers?
Okay.
Miss Escargot.
Okay, I like that.
The costliest dinner I ever treated someone to.
Finally, I do want to look at shares of DaVita. This is the kidney dialysis company. It fell 3% today. Fell more earlier in the session. It did become aware of a ransomware incident that has encrypted certain elements of its network. The full scope, nature, and potential impact on the company are not yet known at this point. Shares falling today by just about 3%.
All right, let's take a quick look at yields because we did see a lot of activity there. You see on the short end of the curve there, that was where most of the activity was. Down 11 basis points on your 2-year yield, 15 on that 5-year yield. And you did also see buying going on in the longer end of the curve, drops of about 10 basis points, on the 10-year, and then another 5 to 6 basis points on the 30-year yield. But again, really doesn't underscore the volatility that we saw in between here. Volatility, of course, that was also whipsawed around by some of those reports that we got out around 11 a.m. with that New York Fed survey showing inflation expectations amongst U.S. households continuing to creep higher as their outlook, Carol Massar, for their own economic conditions continue to drift lower.
Like, kind of interesting to see at least, that trade in the Treasury trade. But I got to say, I feel like we just kind of wait for the next shoe to drop. And, whether or not we're going to see something new, additional, lasting when it comes to tariffs. And I think it's a really difficult market environment to work within. I'm curious to see what the Treasury Secretary, Scott Bessent, has to say definitively. But can we even assume that we will have anything definitive when it comes to tariff strategy here?
I don't know the answer to that, but what I do know is that it seems like every day we get more news. I mean, how many of us woke up on Saturday morning thinking that smartphones and laptops were exempt coming from China to these 145% tariffs? And then we learned yesterday that, okay, there are going to be these sectoral tariffs for semiconductors, and these devices will actually fall under that category. So there is this sort of temporary reprieve for some of these large companies, including Apple, but it doesn't seem like this is the type of company that's going to escape unscathed.
Yeah, Carol, you mentioned definitive. It's definitive until someone else says something else, which is why people keep going to stores and loading up and buying what they can right now because they have no idea what could change in the next day or so. And a reminder that President Trump did hint that there was a possibility he would announce tariffs on semiconductors perhaps today. And, so far, we haven't heard anything.
Autos and auto parts, right?
Mm-hmm.
Yeah. That's the other thing. So then maybe this little hint earlier today that there would be exemptions for auto parts.
But
again, a new bit of news.
Yeah, but the question is, I mean, when do you get sort of some stability in these announcements? Because again, it's not really what the policy is. It's the question is that policy going to change in a few months? You're not going to get any company to make the type of investments that I think the administration wants to see, unless they have some clarity that if they do this, they're not going to have the rug pulled out from them in a matter of days, in some cases, or months.
Yeah, how do you game this out, especially if it means investing or making investments or hiring people or what have you? I kind of keep going back to that. It's a tough environment. All right, folks, that's a wrap. Our Monday almost over. Our cross-platform coverage on radio, TV, YouTube, Bloomberg Originals. We call it the closing bell. We will see you again, same time, same place tomorrow.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, let's remind everybody we are awaiting a conversation between our Anne-Marie Hordern and the U.S. Treasury Secretary Scott Bessent. That's happening in just about, 10, 15 minutes. So we will take you there live to that interview and that conversation. And safe to say, a lot of it's going to have to do with tariffs. So we'll see what we can get in terms of definitive statements about tariff strategy going forward.
It's funny you say definitive.
I know.
Because I feel like nothing is definitive.
Well, and I think... Right. And that's what makes it really tricky for CEOs, leaders, investors. I mean, if you really think that the market is bottomed out, that this is as bad as it can get in terms of a tariff hit, then, okay, go ahead and make an investment. But if you don't, it's really difficult.
And there are real world implications about what's happening here. Sean Donnan writes about him. He's Bloomberg News senior economics writer. Sean, I want to go right to a story that you wrote, or that you and the team, I should say, the team has written earlier today, just about what President Trump's policies and what's happening already with toys and other products coming from overseas that are not necessarily going to potentially make their way to other parts of the world right now. What exactly is going on here?
Look, it's very simple. There's a huge amount of uncertainty out there, and right now, a lot of businesses are just deciding that they're going to hit the pause button and wait out this uncertainty. And that means they're not hiring, they're not making orders, they're calling up their suppliers and saying, you know what, that shipment that I wanted, let's just put a pause on that. And you guys hold on to that for a second, because I don't know if I can afford these tariffs. And I don't know if those tariffs are going to be there a month from now, 3 months from now, a year from now.
Okay, that's exactly what I wanted to get to, because we just had this conversation with Scarlett and Romaine on TV and talking about this idea of definitive answers. Is there anything definitive? It's like, I'm not asking a philosophical question, but
except that he likes tariffs.
Doesn't there have to be some sort of thing for businesses to be able to say, okay, this is the policy, and now that we know the policy, we can make decisions? Doesn't there have to be some sort of stability there?
Absolutely. If you're a business, if you're an investor, if you're a consumer looking to make a major purchase, you'd like to have that stability, that definitiveness. But you know what? We've been, and let's get philosophical here. We've been on a journey, through this White House's own journey on tariffs and how definitive they are. Just a week ago, we were hearing from the administration that there was no negotiating to be done. These tariffs that they had announced on Liberation Day were reality, and the world had to get used to them. Of course, on April 9th, last Wednesday, we see the president put a big pause on some of the highest reciprocal tariffs over the weekend. We see them quietly on a Friday night, kind of notify industries that there is this huge carve out in the tariff wall for tech products, smartphones, and so on. We've heard the president today say he's given Tim Cook a victory. And then we're hearing today that, there may be a similar carve out for auto parts, as, it takes a while to get production onshored here in the United States. These aren't things that happen overnight. We're also getting, a lot of confusion. Yesterday on the Sunday morning shows, we had Howard Lutnick saying there was no negotiating to be done about semiconductor tariffs that were going to come at some point. in the near future. By the evening, as he's flying back from Mar-a-Lago, President Trump is telling reporters on Air Force One that, well, I like to be flexible and maybe we will have some negotiations. So, look, there is nothing definitive right now. That is a big problem for businesses. I was talking to someone earlier today who said to me, you know what, trying to do business today, it's like trying to hit a moving target with a blindfold on.
Wow.
So I guess what I care about too, Sean, is how do we figure who's really calling the shots? It's obviously the president, but who is the chief advisor that he's really listening to, right? We know the people that are in that inner circle, whether it's the Commerce Secretary, Howard Lutnick, the Treasury Secretary, Scott Bessent, who we're going to hear from just momentarily with our Anne-Marie Hordern, whether it is Peter Navarro, right, who has been in many ways the chief architect and chief advisor when it comes to tariffs for the president. But having said that, I am curious who he's listening to. Is he kind of keeping one eye on the markets? And is the White House a little kind of off kilter, or is there just a lot of back and forth? I'm just curious about the organization of what's going on inside the White House.
Look, we're all curious, right? I mean, and the answer is it's a shifting. The cast of characters has stayed the same, it seems. The cast of advisors, but who has primacy has changed over time. There was a time just a few weeks ago when Peter Navarro clearly had the president's ear, and that's when the president was going to go, with a real maximalist approach on tariffs. We know that Howard Lutnick has had a role in the lead as the anointed trade czar early on as Commerce Secretary. And we know that in recent days, it looks like Scott Bessent has become the lead in terms of certainly dealing with the outside world and negotiating with the rest of the world. This is an unusual situation, it should be said, to have Treasury Secretary in the lead negotiating trade deals when you literally have a U.S. trade representative whose entire job is to negotiate with the rest of the world.
How would you characterize the difference in philosophy between the trade representative and Secretary Bessent?
Look, I think we all agree that at this point in this administration, you go from MAGA extreme to MAGA light, right? I mean, there are no free traders in this administration, and that's just been part of the deal that you sign when you joined this administration. President Trump did not want the same diversity of views that he had in his first administration, when he had some, open free traders and people like Gary Cohn, who were literally, taking papers off his desk to try and prevent him putting tariffs in place and blowing up trade agreements.
So does this mean that really in the administration, we had a great conversation with Christine Harper, who, along with Paul Volcker, wrote a book about his life, right? And she has seen a lot of different cycles, has covered finance here at Bloomberg, editor of Bloomberg Markets magazine. But Volcker, emphasized, as she said in her words, the importance of those people in positions to advise someone like the president who really understand how the economy works, how trade works. In this regard, the president isn't necessarily relying on those people, is he?
Look, I think he is hearing lots of viewpoints, and there's a debate going on in the Oval Office. But at the end of the day, he has some firm views on tariffs, as he has said. Tariffs is his favorite word in the dictionary. He believes strongly that putting up a tariff wall around the United States will help bring manufacturing back to the United States, will spur a whole series of foreign investments into the United States that will create jobs. So he's all in on that policy. The question becomes the details, and you adjust them over time. I keep thinking back to, there was a really interesting long 90-minute interview between Robert Lighthizer and Tucker Carlson that came out before this. Robert Lighthizer, the U.S. Trade Representative in the first Trump administration, who really is, I think in some ways the philosopher. Let's get back to philosophy. Behind a lot of this trade policy. He is someone who guided trade policy and tariffs in the first term. And one of the things he said in that interview is, look, we're going to go with tariffs, and then afterwards there will be adjustments. We're going to make mistakes and the rest, and that's what we're seeing now.
Yeah, absolutely. Always good to check in with you just on the money when it comes to the ins and outs of the president's trade policy and tariff policy. Bloomberg News senior economics writer Sean Donna out there in our D.C. bureau. Folks, we are going to hear some more about the president's trade policy, tariff policy. Right now, let's go to Anne-Marie Hordern of Bloomberg TV in Buenos Aires with U.S. Treasury Secretary Scott Bessent, an exclusive.
I'm pleased to be with Treasury Secretary Scott Bessent. This time you're back on Bloomberg in Argentina. Thanks for joining us again.
Good to be with you. Good to be in Buenos Aires.
Yeah, it's fantastic here. So you've come here at a time when the IMF has just announced this $20 billion agreement with Argentina, but we haven't seen a Treasury Secretary come to Argentina since Trump's first administration, and that was for a G20. So why the emphasis from the Trump administration on Argentina?
Well, Anne-Marie, a couple of reasons. The reason for being here today is today's a fulcrum day. So the Milei administration has done 3 adjustments, and this marks the beginning of the third one. So they did a large fiscal adjustment, a large monetary adjustment, and they're doing they announced on Friday a large currency adjustment. IMF has allocated $20 billion to them. The World Bank has allocated $12 billion, and I wanted to come here today to show support for President Milei and his commitment to what I think is historic in terms of bringing Argentina back from the precipice.
When it comes to the trade negotiations, I'm sure you spoke with President Milei about the 10% rate that Argentina was hit with. Do you think at some point that can come down to 0?
Look, I think we're going to start the negotiations, and just like with everyone else, I'm telling them, bring your A game. We'll see what you got, and we'll go from there.
Can any country go to 0?
We'll see. I don't know what's going to happen with the negotiations because we've got a whole box of things we've got to overcome: tariff, non-tariff trade barriers, currency manipulation, and subsidization of labor and facilities. So there's a big menu there.
There's been an early focus on Latin America writ large from the Trump administration in the first 100 days. Is Latin America policy also, in a sense, China policy for this administration?
Well, I think that might be a good description, because what we are trying to keep from happening is what has happened on the African continent, where China has signed a number of these kind of rapacious deals marked as aid, where they are really, they've taken mineral rights, they've added huge amounts of debt onto these countries' balance sheets. It's undisclosed to any of the other international organizations. They've got tolling arrangements. So they're guaranteeing that future generations are going to be poor and without resources. And we don't want that to happen any more than it already has in Latin America.
China has a foreign exchange swap with Argentina. Would you consider a credit line directly from the United States?
That's not under consideration in terms of, so they have an $18 billion credit swap in RMB. Argentina, under the previous Peronist government, drew down $5 billion, and that will remain outstanding. The Chinese showed very good faith effort after the announcement, or in conjunction with the IMF announcement, so that is going to be rolled forward for a year.
But do you want them to get rid of that swap with Beijing?
Well, I think as this administration continues their stay the course on their economic policies, they should eventually have enough foreign exchange inflows to be able to pay that off.
So less than 2 weeks ago, you and I were talking outside of the White House after what the president called Liberation Day, and you said you weren't part of the negotiations. Now you're leading them. What's changed in these past 12 days?
No. What I said was I didn't construct the actual
Tariff rates.
The tariff rates. I've always been part of the tariff policy. I had been focusing on tax. Maybe you want to talk about that later. That's going very well. And now with the trade negotiations, I'm going to be part of that. And the president has hit a 90-day pause button, and we are moving quickly with many of our most important trading partners. So we had Vietnam in last week. We had Japanese in on Wednesday, South Korea next week. So it's going to move fast. And but the important thing for your viewers to know is we're setting up a process, and we are going to run that process. It's going to be orderly. And at the end of the day, especially for the most important trading partners, the president's going to be involved.
So when it comes to the current negotiations this week, you're also sitting down again with the Spanish negotiating team, the Japanese negotiating team, and also the Spanish economy minister?
Well, the Spanish economics minister was just a prearranged meeting. He and I have never met. So that is not a trade sit-down. The Japanese meeting is a trade negotiation.
The Japanese prime minister recently said he's not going to rush to get a compromise and a negotiation. How quickly do you think you can see these deals come to fruition?
Well, again, I think there will be advantage to our allies, especially, and a first mover advantage. Usually the first person that makes the deal gets the best deal. So
who do you think will be first?
It's their choice.
Is there a handful of countries that you expect to have a deal before the 90 days is up?
Oh, I think there could be numerous countries. And look, it may not be the actual trade document, but we will have an agreement in principle and be able to move forward from there.
So are we talking about a dozen or 70 plus?
Look, I think it's going to depend, but we're going to move with all deliberate speed. And again, it's going to be a process. It's going to be USTR, who just has mountains of data that they've been collecting over the years. Because in a funny way, the tariffs are the easiest part. So a country with high tariffs, you can just say, okay, this, get rid of it. It's the non-tariff trade barriers that are more insidious, more difficult to spot. And it's probably going to take a little longer to exercise those demons.
When you said you weren't part of the rates in that chart that the president held in the Rose Garden, is he taking a maximalist approach? Neil Dudder recently wrote that President Donald Trump has cracked a lot of eggs, and now Scott Bessent, the Treasury Secretary, needs to make an omelet. Is that how you view this situation right now?
I view not giving away negotiating secrets on worldwide television as the essence of negotiating.
You recently talked about getting deals done quickly with partners to then confront China together. When you're in these negotiations with trading partners, are you looking for them to offer up something to combat Beijing?
Well, I think combat's an aggressive word, but look, I think now that we have the China tariffs in place, that they are going to want to have some protection from Chinese goods flooding their markets. That China's business model is like from that Disney movie where the brooms are carrying the buckets. Like they're not going to stop manufacturing because the U.S. has a tariff wall up, so those goods are going to go somewhere.
Where do you think they're going to dump?
Well, I think it depends on the good.
We have exemptions now, though, for electronics, so we still expect electronics to come into the United States with the smaller tariff rate, the fentanyl, 20%.
But you were asking where are they going to dump? I think it will depend on what is the good. You know, higher value-added manufacturing goods, likely in Europe, Canada, in the G7, and then kind of more of the baubles and knickknacks in the global South.
China's Commerce Ministry came out when the tariff rates were going above 100% and called it, quote, a joke. Has there been negotiations on any level between Beijing and Washington right now?
Well, look, it'll come from the top. President Trump, Chairman Xi have a very good relationship. And I wouldn't say that these are not a joke. I mean, these are big numbers. I think no one thinks they're sustainable, wants them to remain here, but it's far from a joke.
Will they just say that the rate is so high, it's become a joke? Basically, does it just stop trade between Washington and Beijing altogether? Do you see a decoupling of these two economies?
Well, maybe the trade minister has a different sense of humor I do, but I don't see anything funny about it.
Do you see a decoupling, though, between Washington and Beijing?
There doesn't have to be. There could be. There's a big deal to be done at some point, but look, what is different with China that is different in the history of trade, that normally, if you go back to the big trade deals or the currency deals in the 80s, the Plaza Accord, the Louvre Accord, the Reagan auto deals, our leading economic competitors were our military allies. China is both our biggest economic competitor and our biggest military rival. So that's going to require a special kind of formula.
Are you teasing out a Mar-a-Lago Accord that we should be paying attention for in the future?
I'm not sure what you're talking about.
Well, potentially getting all these trading partners together to discuss fair, balanced trade?
Well, we're doing that over the next 90 days.
Okay. So shifts in tariff policies has had markets on edge. Even the president recently remarked that the bond market was, quote, queasy. Do you have a sense of who is dumping U.S. assets? Who's been dumping U.S. treasuries?
I don't think there's a dumping, and I think we saw in the tick data either today or Friday that actually foreign ownerships picked up. We had three big auctions last week, and on the longer end auction, 10-year, 30-year, we saw increased foreign competition. So I actually think this is one of those occasional VAR shocks that you get in the trading community. I think a lot of people got very leveraged, maybe out over their skis, and then you combine that with some real money selling, and you get these moves.
So you don't think it's sovereigns, potentially it's hedge funds unwinding?
I have no evidence that it's sovereigns. And look, Anne-Marie, not you, but the nature of journalism is to create a headline that 10 days ago, when 10-year yields hit 390, said, well, Secretary Bessent got what he wanted. He got 10-year yields down, but it's the wrong reason. Now, I forget what they hit on Friday, maybe 440 something.
We saw a 50 basis move last week in 10-year yield at the same time that the dollar was weakening nearly 3%. How do you simultaneously look at that situation? It feels like investors are dumping U.S. assets.
Well, look, I've learned that not to look at what happens over a week, right? Like, I, for better or worse, have lived through a lot of these things, and in trading, in one's personal trading history, it's the scar tissue that sticks with you the most. I can tell you exactly where I was standing in 1998 when the long-term capital, the debacle happened. That had nothing to do with anything other than a bunch of geniuses up in Greenwich who had too much leverage.
So you're not concerned at this moment about the U.S. dollar or the U.S. Treasury losing safe haven asset?
No. Look,
we're still a global reserve currency.
We are still a global reserve currency. We have a strong dollar policy. The dollar can go up and down. If you go and look back at President Trump's first term, I don't remember the exact number, but the dollar in 2017 went down, I can't remember, 7, 8, 9%, and then once the tax bill was done, took off for the remainder of his term.
Have you spoken to the Fed at all about contingency plans, though, if financial stability risks flare up?
Chair Powell and I have breakfast every week, and we discuss a wide range of things, and our staffs are always in contact. We have a markets room, they have a markets room, but and specifically, did we discuss some kind of a break the glass? I think we're a long way from that.
So when was the last time you guys spoke? You had breakfast last week?
We had breakfast last week, and it was an away game. I was over at the Fed.
And no concern so far from the Fed chair on what he saw in the Treasury market?
I think we would have heard from the Fed chair. I think we heard from Governor Collins of Boston on Friday. We heard from Governor Weller today on his thoughts on what tariffs mean. So it seems like business as usual.
When it comes to the Fed chair, his term is up May 2026. So we're almost 12 months out from that. When are you going to start to think about, have these discussions with the president about who should lead the Fed?
Well, we think about it all the time. I think when are we going to start the interviewing candidates? And that'll be sometime in the fall.
In the fall, so about 6 months lead time.
Yep.
The U.S. Supreme Court recently came out with a ruling that the executive branch, the president for now, could oust top officials at independent agencies. And that has some individuals in the market a little bit concerned about what this could mean for the independence of the Fed, which is really a cherished pillar of wanting to invest in America. Do you have any concern about potentially President Trump ousting Fed Chair Jay Powell or the independence of the Fed?
Well, and Marie, I've repeatedly said the Fed has two duties. And I believe that monetary policy is a jewel box that's got to be preserved. And then they have regulatory policies. And I think we can have more of a discussion because the Fed is one among three bank regulators. And there's the Fed, controller of the currency, and the FDIC. So I think it's very easy to delineate between those two.
So at the moment, no concern?
No concern.
When you talk to Fed Chair Jay Powell, at the moment, it doesn't sound like they feel like the need to step in on this unraveling we saw last week with the bond market. Does the Treasury have any plans to do something if this was to become more unnerving?
Well, look, the Treasury has lots of things we can do, and but again, I think we're a long way from that.
But all options would be on the table.
Sure, but again, we have a big toolkit that we can roll out. We do regular off-the-run buybacks. We could up the buybacks if we wanted. So.
Just finally, I want to get your thoughts on something you told me, John, and Lisa in February, which was that in your old world, you would be that person with your ear against the door trying to understand what policymakers were doing so then you could predict where financial markets would go. In this moment where we hear from top executives constantly, today it was the Goldman Sachs CEO, last week it was Jamie Dimon, and this uncertainty, especially around tariff policy, what advice would you be giving to your old self?
To look at the whole policy because, again, not you, but others in the media can pick one factor. So right now it's tariff, but we have you mentioned we have tax coming up. We have deregulation. So it's a the leg stool, and I would try to think about what's happening. The tariff sequencing was always going to be first. The tax bill's going very well, and I think I've been pleasantly surprised at how quickly that's moving along. And then deregulation from our area on the financial side and in the rest of the economy, that takes a little longer, but that will start kicking in September, October, in the fall, and those are going to be very powerful.
I believe you described as a three-leg tool, and right now, everyone is focused on one part of that leg, and that's the tariffs, as you say. But when it comes to the tax cuts, right now, what the market is expecting and what could get done in Congress based on how slim the majority is for the Republicans is just an extension of current policy.
I think that's wrong. I think that the underreported story in the media, the story that's fun to report, doesn't get reported enough, is the Democratic chaos, but the underreported story is the remarkable Republican unity led by President Trump. Speaker Johnson, on first try, got instructions out of the House for the budget. He passed a clean CR first try. Leader Thune pinged it back to the House very quickly with their instructions, and I had something along with Kevin Hassett, had an NEC chair called the Big Six, which also includes Leader Thune, Speaker Johnson, Senator Crapo, Committee Chair Jason Smith, and everyone's very aligned, and there's going to be a lot more bells and whistles other than just changing the date on TCJA.
So your pitch right now to financial market participants, to consumers, is you need to see the entire picture.
You need to see the entire picture, and as President Trump said the other day, stay cool. It was my message when I was out with you on April 2nd. it was to the countries. These are maximum rates, so you ask if it was a maximal strategy. If you don't elevate, this is your maximum rate, so don't elevate. You have, in markets, the upside barrier. You don't have unlimited risk, and then come to us, and we will negotiate in good faith.
Can you guarantee clarity in 90 days?
I think clarity is through the eye of the beholder, but I can guarantee you that we're going to run a robust process, and I think the market can take great comfort in that.
So maybe some of that uncertainty starting to evaporate.
Yeah, if we measure uncertainty by the VIX, I think that the VIX, I don't want to make market calls, but I think that the VIX spiked and is likely peaked.
Secretary Bessent, we really appreciate your time. Of course, that was Scott Bessent, the U.S. Treasury Secretary here in Buenos Aires, and his pitch to the world. It's a three-legged stool in terms of Trump administration's policy proposals. Right now, the market squarely focused on tariffs.
All right, Anne-Marie, thank you so much. That, of course, was our Anne-Marie Hordern in Buenos Aires, Argentina. There, of course, with the U.S. Treasury Secretary Scott Bessent. Just looking at some of the headlines, a bunch actually out of the interview. But I think what was interesting and certainly pertinent in a big way to the Bloomberg audience is the U.S. Treasury Secretary Scott Bessent saying no evidence of sovereign sales of U.S. Treasuries, not concerned about the U.S. dollar losing its haven status, and says that there's been increased foreign competition, in fact, at U.S. debt auction. So not seeing any dumping of U.S. Treasuries, which has been the concern, and in terms of the imbalances that we've seen in the Treasury trade in particular, prices going down, yields moving up in an uncertain environment. So it did, and we've also seen weakness in the dollar. So it really did seem like investors, well, people are still trying to figure it out, whether or not investors are pulling away from all U.S.-based assets. But the Treasury Secretary seemed to say, no, it was
I want
not
to
for
repeat some of the
treasuries.
headlines because there were 4 red stickies. A couple of them have to do with Argentina. That's where the interview began, and that's where the interview was taking place. Treasury Secretary Bessent expects Argentina to be able to pay off China's swap line. Also saying that there's no evidence of sovereign sales of U.S. Treasuries, which you were just speaking about, Carol. And then eyeing sometime in the fall for discussing the next Fed chair. They have the two of them, the Fed chair and the Treasury Secretary, go to breakfast every week. Anne-Marie asked where they had it last week, and it was an away game.
An away game.
So I think it was, away for the Treasury Secretary.
So at the Fed, maybe?
At the Fed, it sounded like. And then also the Treasury Secretary saying we could run up buybacks if we wanted.
Yeah, which is interesting, right? And a lot of the interview had to do with Argentina being able to pay off its China swap line. And it makes sense that they are in Argentina, and the Treasury Secretary and the administration should eventually have enough currency inflows to be able to pay off that China swap, which has been something that has been around for a while and has helped certainly Argentina, I should say, in terms of keeping its currency stable. But it also talks about a relationship in many ways, and you wonder about the uncoupling or coupling of it. Let's get into it, and let's see what our own Enda Curran, Bloomberg News global economy reporter, has to say about what he just heard from the Treasury Secretary, Enda, out there in our Washington, D.C. bureau. Enda, you were listening as we were listening, and Bloomberg's audience was listening and watching as well. The Treasury Secretary, we do have some headlines, but curious to see what was of interest for you.
I think a very wide-ranging interview. Obviously, it sounded like the Treasury Secretary was trying to inject confidence in the process of what they're trying to achieve through trade policy. He was promising and making clear there's going to be an order and a process there. And then secondary to that, he was making the point that what's going on in the market is effectively a kind of liquidation of the speculative trading side of things. He was making it clear that those long-term investors like government money, sovereign wealth funds, those kind of asset holders are not withdrawing from the market. So it sounded like he was trying to inject confidence in the overall strategy, that there is a plan, that there is a process here. And he also made clear, by the way, that not just are talks underway, but that he expects some kind of agreements to come pretty soon, even if they're not finalized. So clearly an attempt, I would say, to calm nerves, soothe doubters about the Trump trade policy, and he's making clear that they have this.
Do you think, Enda, that it will soothe the folks out there? Will it calm nerves?
It's interesting. I think his point on the market purchases of treasuries were quite strong. He was making clear he's not getting any feedback, and you would assume, as he described himself once as the chief bond salesman for the US, you'd assume he gets good feedback from buyers and sellers. But nonetheless, though, when he made a remark that, maybe the media narrative gets carried away, it's not just the media making this point. There are like plenty of those in the market raising questions over who exactly is selling treasuries and why. Like, is this a structural reflection on the US, not just on the trade policy, but underlying deficit? So I think there might be some skepticism there, but nonetheless, he does hear, we would expect he hears a lot of the flows. And on the trade side of things, it sounds like he's trying to bring order to what has been obviously very fast-moving, quite confusing period of headlines on tariffs. And he's now making the point that, look, there's a system here. We've got the US Trade Representative Office with all the data. They're doing all their work. We're going to be sitting down with all of these delegations, and we're going to be reaching deals over the weeks to come. And he was emphasizing near term.
And what was interesting too, I was thinking about, okay, he's in Argentina, right? An emerging market that has had certainly its ups and downs, right? And they really spent a lot of time talking about the relationship with China specifically and what China has done to help Argentina when it comes to its currencies. For those who may not be so familiar, I mean, I'm just thinking about the backdrop, the discussion, and why this was important.
Yeah, well, of course, he's down there the same weekend and period of time that the Argentina have agreed a major new loan with the IMF, right, which is the big sort of US-backed outreach to the rest of the world that offsets whatever China does. I didn't think he was explicitly pushing back on China in those remarks. I mean, I think Anne-Marie asked him, what about that swap line? They want Argentina to give that up. That's basically a line of emergency credit that Beijing offers Argentina if they need it. But Beston was making clear that, the US is there to do business, to cut a deals, first mover advantage, and he even made the point that China can also do a deal if they want to. He said, that's a possibility. So he's obviously a hulk on China, but I didn't get the sense that he was I didn't get the sense he was shutting the door on him, so to speak, Carol.
What is his role in trade negotiation?
Well, it's clearly, I would say from the outside looking in, it has evolved. You would say as Treasury Secretary, it's not his entire remit.
Exactly.
But clearly he's been tasked now with that over the past week or so. President Trump and so on have said this publicly, that he's going to lead these talks with your Japans and your Koreas and so on with the trade representative. There are some people saying that, there's good cop, bad cop. Commerce Secretary Lutnick is kind of the attack dog for trade policy. He's out there saying why the US needs to do this for their own self-interest. And then the Treasury Secretary Best comes around the corner and kind of soothes everything over and navigates a deal. That seems to be his role in this, kind of coming through the middle.
Yeah, kind of fascinating, right, in terms of what we got. Enda, thank you so much. Really appreciate the breakdown. Bloomberg News global economy reporter Enda Curran there in our D.C. bureau. We should remind everybody, too, that the U.S. Treasury Secretary said we still have a strong dollar policy. We're a long way from break the glass situation. So kind of trying to, I think, again, kind of manage, coordinate, calm everybody down. Certainly after the week and a half that was a lot of volatility and uncertainty about what U.S. markets, kind of what happens going forward.
If you missed any of that interview, Anne-Marie Hordern and Treasury Secretary Scott Bessent, check it out on the Bloomberg terminal and at Bloomberg.com. Somebody keeping an eye on everything happening after hours, all the headlines that are crossing, is Amy Morris. She's in our D.C. newsroom for an updated Business Flash. Hey, Amy.
Hey, Tim, Treasury Secretary Scott Bessent, you were just talking about that interview with Bloomberg's Anne-Marie Hordern in Argentina. He was also talking about tariff and trade, and he said there does not have to be a decoupling with China, but he says there could be.
There doesn't have to be, but there could be. There's a big deal to be done at some point.
Treasury Secretary Scott Bessent says they're looking at sometime in the fall for discussing the next Fed chair. The Trump administration took a decisive step toward imposing tariffs on semiconductor and pharmaceutical imports, initiating probes led by the Commerce Department, which said it would be investigating the impact on national security of imports of semiconductors and semiconductor equipment, as well as pharmaceuticals and pharmaceutical ingredients. We do bring you closing numbers each day here at Bloomberg. The S&P gained 43 points, NASDAQ up 107, and the Dow gained 312. 10-year Treasury yield at 4.37%, and the 2-year yield at 3.85%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's the Bloomberg Business Flash. Let's go back to Bloomberg Business Week Daily with Carol Masser and Tim Stenovic.
Hey, Amy, thanks so much for that update. Really do appreciate it. Amy's down there in Washington. And speaking of Washington, we did see this story cross on Friday evening. And we knew we had to speak to Riley Griffin at next chance we had. That chance is now. HHS Secretary Robert F. Kennedy Jr. warned FDA administration staff about the influence of the deep state on the agency in an all-hands meeting on Friday, where he had also made off-color comments about children with developmental disabilities. Riley Griffin is a technology reporter who focuses on Meta platforms, but in her previous life, she covered all things healthcare policy and politics, and that's where we want to start with her now. She joins us from our San Francisco bureau. Riley, what was this all-hands meeting on Friday?
Yeah, on Friday, much to the surprise of FDA staffers themselves, they were invited to a meeting in which RFK Jr. was speaking directly to staff over a video. There were watch parties at FDA's headquarters, and the remarks that RFK Jr. made really stunned them. It was wide-ranging, expanding from conversation about the deep state and CIA, in RFK Jr.'s own words, to what he described as an autism epidemic and his own experience working with children with developmental disabilities, using comments that really frustrated, disturbed some of these staffers, some of whom walked out of rooms, looked at each other in disbelief. It was just a day of shock for folks on campus at a time where HHS is facing a massive restructuring too. So Friday news dump for you, Tim.
Well, you succeeded in that. I was walking home and I was like, what is this?
It's crazy. Or I don't know that I should, I guess some would say it's crazy. So what are staffers doing? Obviously, these people have been put in place to ensure that when it comes to drugs, when it comes to food, that things are done in a way that brings no harm to American citizens. So I'm just curious about what are they doing? Remind us too the DOGE impact that we've seen. Roll it all together for us, Riley.
Yeah, so DOGE, the new administration broadly under this reorg is expecting about 20,000 HHS employees to be gone after all is said and done. And that includes people who take that fork in the road email and choose to leave. That includes early retirees, and that includes people who are essentially laid off. Within FDA, the Food and Drug Administration that we're talking about here, that's about 3,500 staffers. And they do all sorts of things. Industry analysts, for example, expect this could have a kind of headwind on the drug approval process, which is really interesting because earlier you're talking about the headline that just crossed the wire as the Trump administration looks to secure the pharmaceutical supply chain with tariffs, ultimately using commerce to assess a national security risk there. So these two things may not necessarily be achieving the same end, the layoffs in FDA and the tariff policy.
You know, Riley, we're laying out the numbers. HHS, 20,000 are expected to be gone. FDA, 3,500, I believe you said, to leave. Who's left? How many are left? Who's left?
I believe that puts us about 40,000 folks, but I would have to double check that number for you. But it's still a sizable.
Left. Yeah.
Yes, it's a sizable cut. Is the takeaway that 20,000 folks would be gone, and among those 3,500 to the Food and Drug Administration.
Yeah, it's about a third, right? Gone.
That's wild. Yeah. Hey, before we let you go, I mentioned, you're out there in San Francisco, you are covering Meta platforms, but I still want you to live in this world of pharmaceuticals and drugs because that is the news that's breaking right now. The president pressed forward with plans to impose tariffs on semiconductor and pharmaceutical imports by initiating probes led by the Commerce Department. What do we know about these sectoral tariffs? And I mean, you cover technology too, so you're looking closely at sectoral tariffs for technology. But is there a way to easily make these drugs in the U.S. that, that's the whole point of these tariffs?
Yeah, it's a really complicated question because the pharmaceutical manufacturing supply chain at this point is a global one. And it's not just the finished final product, but the underlying materials that are used to make these different drugs, biologics, the kinds that you inject, even components of pills, are coming from all over the world, many from China, many from India. And so these tariffs certainly will be impactful. I know we're hearing about impacts on pharmaceutical stocks of U.S. drug makers, but this is breaking with precedent. Historically, medicines haven't been caught in the trade war, if you are to use those terms, because of the impact it has on the average person.
Yes,
So time will tell.
I'm so glad you went there. I mean, I think Carol knows this story because there was an antibiotic shortage a couple of years ago, and I was at the doctor with, my son was 4 at the time, and he's got this terrible ear infection. He's in pain, and we sat there with the doctor calling pharmacies all over New York City to try to find antibiotics. And I was thinking to myself, this is not part of her job. She's not seeing other patients right now. This is taking her 30 minutes to do something that should be done in seconds on a computer.
And were you also thinking this doesn't happen in America or in
exactly.
the US
And I'm
of A?
so concerned, Riley. Are we getting to a point where this could happen with other drugs?
I think it is too early to tell, especially since it's only just a launching of the probe, right? This is the precursor to full-blown tariffs. So we'll have to see how this unfolds. But yeah, I mean, everybody in this country takes a medicine or knows someone who takes a medicine. So the impact is high, and you know, we have the same concern that you have for your child in that moment, what this will mean for the supply chain here.
Yeah, kind of fascinating, right? And disturbing, perhaps, on a lot of levels. As we understand, whether it's pharmaceuticals, whether it's technology, none of these things you can't flip a switch and all of a sudden a supply chain moves. Riley, thank you so much. Really appreciate your knowledge and understanding of this area. Riley Griffin, she is U.S. tech reporter, but she's also spent a lot of time reporting on certainly the healthcare and pharma space for us here at Bloomberg, but she joins us there from out on the West Coast.
Let's take a look at some stocks on the move today. Joining us now is Bloomberg News managing editor for Markets Live, Christine Aquino. She's here in our Bloomberg Interactive Brokers studio. No shortage of stocks for you to choose from today, Christine.
Absolutely, Tim. I mean, that's what we love about volatile markets at the very least. Yeah, I want to talk about cars today because, of course, we got those comments from President Trump potentially exploring the possibility of temporary exemptions on vehicles. So remember, right, we were supposed to get tariffs on fully built vehicles of 25% no later than the 3rd of May. Now, those separate tariffs on Canada and Mexico already including a vehicle carve-out, but that's still a significant amount, right? But now the potential for temporary exemptions, at least, really beefing up those car maker shares today. GM up more than 3% at the close, and Ford up more than 4% at the close.
Yeah, that was a lot. And again, nothing definitive done yet, but it's a reminder that the president might roll back or change his mind on some things, and there might be those carve-outs. Apple, let's talk about Apple. Speaking of carve-outs, they probably had a good weekend. We've talked about this today.
I don't know. Maybe.
Yeah.
This is like a weekend of working, and you're like, wait a second, is it an exemption? Is it going to be a sectoral tariff?
So maybe it's half a second.
Lobbyists are going to be hard at work, I'm sure.
Yeah, it's a good point.
In Washington, I don't know. What's your take?
I mean, that's exactly it, right? It's kind of, I guess it's temporary relief, but also a lot of questions, right? Like, what does this mean? How long are the carve-outs and exemptions going to be for? I mean, at least for today, investors were taking the Apple-related news, which is a potential exclusion for consumer electronics as well, which is basically Apple's business. That's a positive for investors today. We saw Apple shares up more than 2% at the close. And of course, we had President Donald Trump name-checking Tim Cook personally, saying that, quote, he helped Tim Cook recently and that whole business. And so, you know, it just goes to show, I think, there's still a lot of uncertainty to be had here. Tariffs very much still in the driver's seat when it comes to moving markets. And it just depends, you know, today's an up day. Who knows? Tomorrow might be a down day.
Yeah, and I will say quite a swing for Apple, even in today's session, right? At its highs, up about 7.5%. Stayed in the green all day, but just finishing with a gain of just a little bit more than 2%. So not as enthusiastic by the end of the day. And we saw that kind of in the overall trade, right? Some enthusiasm out of the gate today, but very different by the close. Still gains, but not as enthusiastic earlier in the session.
Should we talk tech?
Yeah, let's talk. Well, we did. We just talked tech.
More tech. More big tech. You've heard of big tech.
Now let's go to.
Well, I think actually Apple's actually bigger. So yeah. Let's talk more tech.
Staying with big tech.
Meta.
Meta, yeah. I mean, that's a stock that's not having a good day today, right? And it's primarily due to their regulatory troubles. The FTC is indeed pushing ahead with that antitrust trial. Mark Zuckerberg taking the stand. And what's at stake here is, of course, 44% of Meta's 2022 revenue because of essentially the case is that some of the acquisitions that Meta has made in the past last few years pretty much to neutralize its rivals. At least that's the case that the FTC is making. But our own Bloomberg Intelligence analysts saying that the edge is slightly with Meta here in terms of beating that case because they argue that the FTC will have an uphill climb in proving that those acquisitions were indeed violating antitrust laws.
But got Mark Zuckerberg testifying.
Sheryl
Sandberg is coming up, right?
She's reprising her role.
Yeah.
She's back.
And you just wonder, like, who's next in terms of big tech, depending on how this one plays out.
Well, Sarah Fryer, we spoke to her earlier, and she said, look, you've got a company like Alphabet with its acquisition of YouTube, so trying to figure that out.
People might be looking at that. Can I go back to Apple for a moment?
Absolutely.
Do you know from its high to its lows? I know. I'm just going.
What are you doing?
I know.
Cheryl?
I've got kind of that Monday brain. So the high was back in late December 2024, last year, and the low we hit in April, early April. No surprise, April 8th, down 33% in that time frame. Am I messing something up? I don't think so.
I'm going to double check your work.
Yeah,
33.36%. Carol Master is correct.
Yeah, that's amazing. A third haircut.
Yeah, that's.
Well, it's just. Sorry, I'm just trying to get my head around that for Apple.
It's still down roughly 20% from those all-time highs, even with the bounce that we've seen.
This is what we do, Christine. We get lost in playing in the Bloomberg terminal. Just looking at swings.
The Bloomberg terminal is a treasure trove of all these fun facts. I don't blame you.
Unbelievable. Christine, thank you so much. Really appreciate it. Bloomberg News Managing Editor for Markets Live, Christine Aquino. For more conversations, be sure to check out our Stock Movers podcast. They're 5-minute episodes. They're big winners, losers in the stock market, stocks on the move. Listen to Stock Movers. You can find it on Apple, Spotify, or anywhere you get your podcasts. That'll do it for Monday. I got to say again, kind of mellow, kind of weird.
Volume was low.
Volume was low. We talked
but
about, right?
Compared to, the average over the last 20 days on the S&P 500 down about 17.7%.
A little wacky, right?
Yeah. I mean, we heard from Kim Forrest at Boca, who said, we think, she thinks it's a kind of a chill week because it's a holiday.
I got a seat on the train this morning. That doesn't usually happen for me on a Monday.
You got to see what?
I got a seat on both of my trains.
Oh, interesting.
Yeah.
Oh, that is a good.
Saying.
I'm not surprised.
That's an indicator.
I'm not. That is an indicator.
Not a great indicator, but an indicator.
No, I mean everybody's on spring break. I got an easy parking spot yesterday afternoon.
See, there you go.
That's another easy indicator.
All right, guys. We got 3 more days to go. Remember, it's a shortened holiday trading week, but we will carry you through the coverage.